I wanted to look at some of the research you've been put out recently, especially with regards to inflation, because we've had this big debate, Tavi, about the Fed and interest rates and inflation versus deflation and what we're seeing in the economy. So I wanted to share a chart that you had put out over social media. And it's really talking about that inflation comes in waves. And so you have some inflation, then you have some deflation. And I also notice here that by the time you get to the second or third wave, you're increasing inflation. So according to your chart, we've kind of gone through the first wave and we're retreating a little bit, and then maybe we'll go through our second and third. Do you see like this, what we saw in the 70s, do you see that also playing out now, or do you think the situation is different for any reason and it may look a little bit different than this?
The short answer is yes. And unfortunately, I didn't have enough characters to really elaborate on Twitter on why, I think this is where we are. But there's a lot of reasons of what's going on. Number one, it has to do with, inflation, it does develop through waves because it usually impacts consumer behavior over time. And so as that changes, you usually see even businesses changing the way they behave, and therefore that builds on its own over time. So that's the first thing to get out of it. The second thing I think it's important is we've had a couple of years in the last, I would say in the last 2 to 3 decades of cyclical inflation that was, I think a lot of folks are confusing with today's environment. I don't think this is very cyclical. I think the nature of this is actually very secular, and it's caused by what I call the pillars of inflation. We have the wages and salaries growth. We have the shortage of commodities. We also have this reckless amount of fiscal spending.